Welcome to this session in which we are going to discuss about dividend distribution tax under section 115O. Means this is one of the biggest amendment that has happened with effect from AY 21-22. That is with effect from 1st April 2020. If dividend is distributed, then there is no dividend distribution tax. Getting it? So DDT is not applicable for dividend distributed on or after 1st April 2020. You will say, sir, then what are we discussing? Understand, we are discussing its impact. Don't you think we should discuss impact of particular thing? If DDT is not applicable, don't you think government will make a other way to collect tax on it? In short, earlier, who used to pay the tax on dividend distributed? The company used to pay the tax. So it used to be exempt in the hands of shareholders. Getting the point? It used to be exempt in the hands of shareholders. Now what will happen when company is not paying? When company is not liable to pay DDT now, it will be taxable in the hands of shareholders. Exactly. So this is the biggest impact. Now, because of this, what will happen? What else will happen? See. So DDT not applicable with respect to dividend distributed on or after 1st April 2020. What is its impact? Now with effect from 1st April 2020, that is PY 2021, that is AY 21-22, dividend received by shareholders will be taxable in their hands under the head income from other sources. It should be noted that exemption for dividend received from domestic companies will not be applicable with effect from AY 21-22. Dividend from foreign companies was never under the ambit of DDT under 115O, and therefore shareholders paid tax earlier also on the same and will continue to pay the tax even in AY 21-22. Is the first point very clear to you as far as impact is concerned? Okay, second point. Now company will have to deduct tax at source under 194 of Income Tax Act while distributing such dividend. The rate of such TDS will be 10%, and TDS will be done only if dividend payable exceeds rupees 5,000. But in my opinion, second point not so important from CS professional exam perspective. First point is important, yes, not second point. Third point, while because second point is just mode of collection. So to the extent of 10% of dividend will be the TDS. Getting the point? But how that tax is collected is never given importance from the exam perspective. And you know that TDS will apply only if the TDS dividend amount exceeds 5,000 rupees. Okay. In short, if I have some shares in ICICI Bank and during the year ICICI Bank is paying me dividend of 2,000 rupees, will they deduct my tax at source? No. Exactly. So what happens is, what I have to do is, each time I have to take the entire dividend under which head? Each time as an individual assessee, this entire dividend will be taken under the head income from other sources. It will form part of GTI. Then I will take deduction of 80C to 80U. Then I will get total income. Then I will calculate tax. Yes or no? From that tax, I will minus TDS if any. I will minus TDS if any. Did you get the point? And TDS on dividend will happen only in the scenarios which I have told you. So let dividend be 2 rupees, let dividend be 10 rupees, let dividend be 10,000, let dividend be 4,000. Every time dividend from domestic company will be taken where? In the IOS. tax will be calculated, and then dividend will be considered. That's why I'm saying that second point is not so important. Third point, while computing income from dividend chargeable to tax in hands of shareholders, shareholders will get deduction of expenses incurred to earn such income. Meaning to say, if I have earned dividend of 10,000 rupees in total, but there are some expenses of 200 rupees to earn this dividend, then how much of that dividend will be charged to tax? 9,800. Perfect. I will get deduction. That deduction will be, limit of that deduction will be 20% of dividend received amount. So up to 2,000 rupees, I could have taken deduction in this case. Got the point? And finally, companies will get deduction with respect to dividend received from other companies under section 80M. So yes, we will have to study this 80M in detail. Now 80M comes in picture. Why? 80M comes in picture because dividend has become taxable in the hands of shareholders. Getting the point? So did 80M had any importance before this amendment? Answer is no. This 80M section has become important and it has come into emergence, I would say, only because of this particular amendment. Fine. And even 194 has come into emergence only because of this amendment. So I have said what? Impact of, so I have said impact of, abolishing of DDT. Is the point clear till now? Now, what does section 80M says? Okay, listen carefully. What 80M says, listen carefully. I will tell you in short, then we will see technically. I am one Indian company and I got dividend from another company. I am one Indian company. I got dividend from another Indian company. Correct? Now understand that dividend which I received is say 10 lakh rupees. Then government is trying to give me deduction of that 10 lakhs. Is that 10 lakh forming part of my gross total income? Yes, it is forming part of my gross total income. From gross total income, we take deductions under section 80C to 80U. So in that, there is one section that is 80M. Did you get what I'm saying till now? So under this 80M, government will try to give me deduction of that dividend received from other domestic company. So see, to avoid cascading effect, section 80M has been inserted. Cascading effect means what? Cascading effect means sometimes it means double taxation. In income tax perspective, it means double taxation. Yes. SSC is a, what are the conditions? SSC is a domestic company. See, cascading effect, tax on tax is a correct interpretation in GST or any indirect tax. But in this context of income tax, it would mean double taxation. On same amount, paying tax twice. Okay. Condition is that SSC is a domestic company. Means I am a domestic company. I will be called as investor company. Okay. I am called as investor company. My company's name is Pratik Neve Private Limited. So this Pratik Neve Private Limited is a investor company. Income of the SSC includes dividend from domestic companies, foreign companies, or business trust. My income includes dividend from any type of companies, domestic, foreign, or business trust. Dividend is distributed by investor company to its own shareholders before the due date. Listen, I am Pratik Neve Private Limited is distributing dividend to my shareholders when on or before due date. What is the due date? 1 month prior to date of furnishing of return under 139(1) for the PY for which dividend income is taxable in the hands of investor company. Listen, we are talking about PY 2021. Do you know for PY 2021 what is due date of filing return for the domestic company or any company SSE? The due date of filing income tax return is 31st October. You have to understand this is also an amendment. Earlier, the due date used to be 30th September of the assessment year. Now that due date has become 31st October. Yes. Now, in these conditions, the date mentioned is 1 month prior to that due date. So what will be 1 month prior to that due date? 1 month prior to that due date will be 30th September. Did you understand the point? Now listen, this Pratik Neve company, okay, is distributing dividend to the, not only distributing, paying the dividend to the shareholders up to 30th September 2021, which is the dividend for PY. Yes, which is the dividend, which may be dividend for PY 2021. Okay. Now listen, step by step. How much deduction will I get? My dear friends, how much deduction will I get? Aggregate dividend income of the investor company during the PY from domestic company, foreign company, business trust. It includes final dividend, interim dividend, as well as all deemed dividends. And so quantum of dividend will be this aggregate dividend income. So it will be dividend income or the dividend which I am trying to distribute, to the shareholders before the due date, whichever is less. Okay, getting it? So I will see as a government who is the final enjoyer of the dividend. That is the logic behind the section. Let me give you simple figures and try to tell you this section. As a domestic company, Pratik Neve Private Limited, I received a dividend of 40 lakh rupees in financial year 2021. So my dear friends, where is this 40 lakh rupees right now? Has that 40 lakhs gone in my iOS? Yes, very good. So that 40 lakhs is a part of my GTI. So far, so good. No confusion. क्या करना है, टैक्स को इजी करना है ना, तो ठीक है. 40 lakhs is in my GTI. Now listen carefully. All of you are my investor. All of you are my shareholders. I am declaring dividend and paying dividend by 30th September 21. That dividend paid to all of you is 25 lakh rupees. That dividend is 25 lakh rupees. So what government is kind enough to say that out of this 40 lakh rupees, I have paid you 25 lakh rupees. Again, out of 40 lakh rupees of my income, I have paid you 25 lakh rupees. So on this 25 lakh rupees, who will pay tax? Don't you think you all will pay the tax on 25 lakh rupees? Exactly. You all will pay the tax of 25 lakhs rupees. If I also pay the tax on entire 40 lakhs, you also pay the tax on 25 lakhs. Don't you think it will be double taxation on 25 lakhs? Exactly. So how to avoid that double taxation? My dear friends, how to avoid that double taxation? By giving deduction to me of rupees 25 lakh rupees. Is the point clear? So in short, I will pay tax only on rupees 15 lakhs and you will pay tax on you will pay tax on 25 lakhs. Understood? Logic and everything. Happy? Surely they will ask you this in the exam. Yes. Now understand one more thing. I had got dividend of 40 lakh rupees from multiple sources. Out of that meaning to say, whatever it is, on or before 30th September 21, I paid dividend of 50 lakh rupees. I paid dividend of 50 lakh rupees. Now tell me, I will get deduction of how much? I will get deduction of 40 lakhs only. So I will pay tax on 10 lakhs and you will pay tax on 40 lakhs. Got the point? Because that extra 10 lakhs which I have paid is out of my own profits. It is presumed that. So that sir, please repeat example 100%. The second example you are saying, right? Yes. So understand, Deepika, I got dividend of 50 lakhs. I got dividend of 40 lakhs from various companies, foreign, domestic, business trust, etc., etc. Deepika, how much dividend I got? I got dividend of 40 lakhs. Very good. Now listen what I did. I distributed to my shareholders dividend of 50 lakh rupees. So Deepika, tell me, I should get deduction under section 80M of how much amount? 40 lakhs or 50 lakhs? I should get deduction of 40 lakhs. In short, in my total income, how much is included? In my total income, means taxable income, how much of dividend is included? 10 lakhs. Deepika, 10 lakhs. In my total income, 10 lakhs will be included. Na? From GTI, I am getting a deduction of 40 lakhs. So in my, yes, so in short, I am paying tax on 10 lakhs. And my shareholders will pay tax on whatever they receive in their hands. Exactly. So entire 50 lakh rupees is getting taxed. Yes or no? Deepika, did you understand now? Very good. So government's intention is reached, isn't it? Now listen. 115 BBD. We will do 115 BBD and then we will see one example and then again things will get clear to you and then we will in the revision batch do revision of all the points which we discussed today. Correct? Now see, don't get confused. There is a domestic company. There is a domestic company. Anush is asking one question. Sir, but tax is entirely taxed in hands of shareholder. So why do you need to pay tax on 10 lakhs? Anusha, I was just trying to crack the logic. Getting it? Anusha, I will tell you like this. What is the dividend I received? My company received. My company received dividend of 40 lakhs. Yes. 40 lakhs should be taxed once or twice. 40 lakhs should be taxed once or twice. Once. Accepted. So government is kind enough to give me deduction of 40 lakhs. But what is the extra dividend? I paid 10 lakhs. So 10 lakhs also should be taxed. So they are taxing that 10 lakhs. So entire 50 lakhs is getting taxed that way. Now, please don't see who is paying the tax. Finally, is 50 lakhs getting taxed? Yes. Finally, did you understand ATM, 80 ATM? And did you understand that distributor does not pay the tax, but recipient pays the tax? Means DDT is scrapped. Yes, but so be clear with that. Now 115 BBD. Yes, my pleasure. Listen, what is happening? I am a domestic company. I receive dividend from specified foreign company. Specified foreign company means a company, specified foreign company means a company in which domestic company has 26% or more of shares. Foreign company in which this domestic company has shares of 26% or more. That is called a specified foreign company. So if dividend is received from specified foreign company, then it is taxable at a special rate of 15%. At what rate it is taxable? 15% and not normal rate of tax. And application of this section is not optional. This section is compulsory and no deduction is allowed with respect to any expense incurred to earn such income. Note all these points in your mind, because if you don't have example in front of you, you will not understand it at all. See the example and let us apply. Whatever we have learned, let us apply together. Huh? Be careful. Be careful. It is very interesting, but be careful. That's what my advice to you will be. Listen. X Limited is manufacturing company located in Mumbai since 1980. Business income of the company for PY 2021 under section 28. Under section 28 means PGBP income. Yes or no? Under section 28 is 3.2 crores. Turnover of the company for preceding year is always less than 400 crores. So why that less than 400 crores point is told to you? So that normal rate of income tax you consider is 25%. X Limited has opted for lower tax regime under section 115 BAA. So in 115 BAA, what is the rate of tax? The rate of tax in 115 BA is 25%. Plus, it holds few shares. It holds shares in few companies given below. Okay, investee company means in which company I've invested. Country of incorporation means you will understand it is foreign company or Indian company. What is the shareholding in that company? From that you will understand whether it is a specified foreign company or not. Dividend received during PY 2021 and interest on the amount borrowed for investment in shares of companies. Why do you think this column is given? That interest on amount borrowed. Yes. Very good. So that point is given to know the expenditure. Yes. Let's go ahead. So far, so good. Things are clear to you. Yes. Dividend distributed by X Limited during April 2020 to September 30, 2021 to its own shareholders is 27 lakhs. Okay. Due date of submitting return of income is 31st October 21. You know that. India has avoidance of double taxation agreement with country D. As per Article 10 of Avoidance of Double Taxation Agreement, dividend from country D to resident of India is taxable in India. You can neglect that point. X Limited wants to know deduction available under Section 80M and total income tax liability of PY 2021. Did you understand what they're asking you? Listen now carefully. Be careful. What is your PGBP? My dear friends, what is your PGBP? 3.2 crores. Is there any other head of income? We'll go very much in sequence. Yes, income from other sources. Very good. There is income from other sources. Listen carefully. How much is income from other sources? For dividend from this, let's go step by step. Don't jump to any conclusion. For dividend from this A Limited, which is for Indian company, is it 10 lakhs? But from 10 lakhs, how much is the deduction? Deduction is with respect to interest 1 lakh. Can you claim entire 1 lakh as deduction? Can you claim? Yes. Why you can claim? Because it is within the ceiling limit of 20%. Ceiling limit was, yes, very good. Can you claim? Okay, so you will get 9 lakh as income. In short, here I am calculating my IOS. My next question to you is, my next question to you is, with respect to B Limited, how much will you consider in IOS? How much will you consider in IOS? I have written here full 8 lakhs. Can you tell me why? No, I have written 8 lakhs. 8 lakhs is the answer. You have to tell me why. Fantastic. Aisha, fantastic. Vishwanath, correct. We are talking about a specified foreign company. Why specified foreign company? Country D. Country D. Country D means a foreign company and holding is 26% or more. So it is a specified foreign company. When it is a specified foreign company, then entire amount is taxable without any deduction. Yes. So take 8 lakhs. And what about country D? Country D will be taxable at normal rate. Dividend from company in country D will be taxable at normal rates. Why normal rates? It is not a specified foreign company. Very good. It is not a specified foreign company. So 14 lakh minus 2 lakh. It is within the limit of 20% because 14 lakh into 20% is 2 lakh 80,000. You will get deduction of 2 lakh or 2 lakh 80,000, whichever is less. So you can get deduction of 2 lakhs. So taxable will be 12 lakhs. So total taxable IOS is how much? Total taxable IOS is how much? It is 29 lakhs. Are you happy till now? So my dear friends, can you tell me what is your GTI? Can you tell me what is your gross total income? PGBP is 3 crore 20 lakhs plus 29 lakhs. So is your gross total income 3 crore 49 lakhs? Let's check what we have calculated is correct or not. Check. Gross total income is 3 crore 49 lakhs. Now, Mansi, Anushya, Vishwanath, and all of you, be ready for the application of ATM. My challenge to all of you, whose name I took and whose name I am not taking, Rucha, is calculate deduction under section ATM. Can you tell me what is deduction under ATM? After considering this point, which point? That it has given dividend to its shareholders of 27 lakh. Very good. You are saying 21 lakhs. But why not? Why not 29 lakhs or 27 lakhs, whichever is less? Why not that? Not that because no deduction is allowed for dividend from specified foreign company. Yes or no? So here, no deduction. If no deduction here, then what is your dividend other than from specified companies? Dividend other than from specified companies is 9 plus 12, 21 lakhs. Allowed will be 21 lakhs or 27 lakhs, whichever is lower. So allowed will be 21 lakh. Is the point clear, Suraksha? Take deduction of 21 lakhs. See this. So taxable will be, total income will be 328. On this 3 crore 28 lakhs, can we calculate tax? You have to ignore MAT provisions. Calculate tax on, ignore MAT because that's we are assuming. It is 115 BA. You should have taken MAT into consideration, but you have to ignore MAT. You have to calculate tax liability as per normal provisions. So on 328, out of 328, my dear friends, how much is with respect to dividend from specified foreign company? 8 lakhs. So on 8 lakhs, calculate at 15%. Acha, we are going for 115, not BA, BAA. Oh, BAA. Sorry. So BAA will be 22%. Sorry. So normal on 8 lakhs, it will be at 15%. 328 minus 8, it will be 22%. On 320 lakhs, what is it at 22%? Is it 70 lakh 40,000 or 70.4 lakhs? We are doing figures in lakhs. So 70.4 plus 1.2 is your total 71.6. You have to take surcharge at 10%. Is it optional or compulsory? This surcharge is compulsory surcharge. You will get subtotal, you add health and education cess, and you will get total tax liability. And in this case, no MAT. Why no MAT? No MAT, as provisions of section 115 BAA have been opted by the company to compute tax liability. Yes or no? So no assumption required. 115 BAA is there. So there is no question of MAT. Are you happy? Are you satisfied? Did you understand? Fantastic. Fantastic. So you know what I have done? I have done a short recap here. That also I have done here. Recap in the revision batch you will get. You are getting recap in revision batch. What else you want in life? Chalo. So let's see. First, we discussed today about 115 JB MAT. Everything is clear in MAT. You have to calculate normal tax or you have to calculate MAT at 15% plus surcharge if applicable and pay whichever is higher. If you're paying higher, if you're paying MAT, which is higher, then there's a MAT credit. That MAT credit can be carried forward for subsequent 15 years. Very good. Then I have discussed with you normal rates of tax for the company. You have understood normal rates of tax, correct? And I have told you here that take MAT provisions also if company opted for 115 BA. Correct? I have given you surcharge rates as well here, which you know anyways. Okay. Then you know what to add and what to minus when you are calculating book profits. Alternative tax regime, these three provisions, I have given a short comparison here. 115 BA, BAA, BAB. Okay, short comparison has been given. Mainly I have defined and I have bifurcated them with respect to rate of tax. BA is 25%, BAA is 22%, BAB is 15%. How will you keep that in mind? Rate of tax kept on decreasing. Okay, BA, BAA, BAB. BA 25, BAB, BAA 22, BAB 50. Surcharge points, if applicable, here compulsory, here compulsory. Health and education cess is always compulsory. MAT provisions apply in BA, do not apply in BAA and BAB. This is only for domestic company, which is manufacturing. This is for any domestic company. Again, this is for only manufacturing domestic companies. Date of incorporation, there is some restriction on or after these dates here and here in BA and BAB. In BAA, no such restriction. Special income continues to be taxed at special rate as applicable. Again, same, special income continues to be taxed at special rate as applicable. And here they have given you rates of tax for different incomes in case of application of 115 BAB. Clear? Forgo exemption and deduction and unabsorbed losses in all cases. That is a common point in all cases. Did you understand? A short recap of 115 BA, BAA and BAB. Can't get simpler than this. Then, yes, thank you so much. Then 115 QA. 115 QA is buyback of own unlisted shares. You know, that was the reason I was telling every one of you attend. Because even if you have not done it, then now to do it in detail, you will get a lot of encouragement to do it in detail. Okay. Buyback of own unlisted shares or listed shares. Yes, thank you so much. Buyback of own listed shares, unlisted shares is section 115 QA. You know that rate of tax here. And it is on the profit sought to be distributed. And in the hands of shareholders, it is exempt. Then we did 115 BBD. 115 BBD is tax on dividend received from specified foreign company. You understood what is specified foreign company. Specified foreign company means in which holding is 26 or more. Exact 26 is also okay. And no deduction of any expense, including of ATM. That's what I always tell you. If you study initially very nicely, then once you look at the revisionary point also, recap point also, that whole things comes in front of you. No deduction of any expenditure, including ATM. You can now get importance of including ATM. Because you did not take off 27 lakhs, but you took only of 21 lakh. And then you have seen what is ATM. ATM is deduction for domestic company of dividend received from domestic or foreign company or business trust. An allowable deduction will be lower of dividend received or dividend paid by this company up to 30th September of the AY. Of these two, whichever is less. Is everything clear to all of you? So this was our day 1 of revision batch. I hope you enjoyed it and it was a value addition for all of you. So before leaving this session, I would like to tell you that this is the schedule of our revision batch. Why I'm telling you again, we are also going to put today's session on the YouTube. Okay, today's whole session 1 we are going to put on YouTube. It will be divided in 2 parts. Part 1, part 2. It is only your and your responsibility to make it reach to many students who are at CS professional level especially. Because see, if you are understanding the things, it is your responsibility. And you know, my heart goes out to every student who is giving this upcoming exam. So they should be benefited, isn't it? So session 1, I'm uploading on YouTube. You try to make it reach to maximum students. Yes, those are watching the recorded version on the YouTube, same applies to you. Chalo. So from tomorrow onwards, see what is going to happen. As I told you in the session 1, part A, I told you that from session 2 onwards, we'll do assessment of firms plus AMT, then tax planning, management, avoidance, evasion, all these things, international tax in session 4. Then 5, 6, 7, these 3 sessions about GST. But how can we complete GST only in 3 sessions? Because already you will find uploaded in the revision batch videos the rules of valuation of GST, scope of supply under GST and exemptions. And in customs, we can do in session 8 in only 1 session. Again, why? Because valuation is totally given to you on the drive on the recorded videos. Clear? So this is how we are going to go ahead in the revision batch. In 8 sessions of 3 hours each, everything will be revised effectively. And guess what? You're going to get today's Excel sheet immediately on the groups. And also it will be uploaded on the G Drive, Google Drive. So you can have it for your reference whenever you want it. Clear? So can we stop for the day? If you're watching on YouTube, please do mention in the comment how you found this video. And if you're watching live right now, still what I request you is check on the YouTube and whatever compliments and good wishes you're giving me, please put them on the YouTube. It helps, you know, to reach to many students. Correct? Thank you very much. See you tomorrow at 7 o'clock. Thank you, friends. Thank you.